whether you are investing in the stock market or considering changes to your existing portfolio, the sheer number of stocks to choose from can be daunting.
And thoughts? So although it's not necessary for you to have a deep knowledge of each type of stock available, knowing how stocks are categorized can help you make better decisions about where you're investing your money. And we're joined once again by private wealth advisor Will Rogers to talk about what you need to know about the different types of stocks. Will, welcome back.
Good to be here. And so often people talk about the stocks and this nebulous big block of things, and it's kind of like talking about students. You know, there might be kindergartners, there might be college students, there might be students in Columbia County, there might be students in France or England studying science or English. There's all kinds of different stuff. So there are differences, and I'm looking forward to letting folks know about the different types of stocks today.
Okay, so what are the benefits in stocks that we're talking about today?
So first, we're going to talk, one common misconception is common versus preferred. Then we're going to take a look at value versus growth stocks. We'll take a look at market cap sizes, the foreign stocks that are out there, some dividends, and different sectors that you can invest in.
Okay. Well, what's the difference between a common stock and a preferred stock?
You would think you would want the preferred stock. Not so much. The common stock is the one that's got the voting rights. Preferred only means you get a little bit better dividend, and if the company goes bankrupt, then you're first in line. So there is some preferences, but otherwise, you're going to want the common stock, where that's where you're really owning the equity of what you have. Again, the preferred stocks will have the higher dividends, but they're first in line with the bankruptcy, but they're not going to be the ones that give you the long-term returns.
Okay. And again, the names, maybe they're misleading. Value versus growth. What are those stocks?
So you have value versus growth stocks. The value are often undervalued. They're the lower price. It's like you're going to a garage sale and you go, oh, that's a deal. That's a deal. They usually offer higher dividends. A good example is often utility companies where they're just paying the regular dividend. You've got that coming in. Growth stocks, on the other hand, are growing quickly, hence the name growth. They might not have the dividends, but you're thinking about what those future earnings might be. The tech sector and the AI boom is a great example of a growth stock where it's just grown. They're not paying any dividends, but they're expecting great earnings in the future.
Okay.
All right.
Big deal on that.
So tell us about large, mid, and small cap stocks.
So this is the size, and when you say cap, it's capitalization. And if you were to take all the shares, multiply them times the share price, and sell it, it's the value of the company. So if we're looking at a company that's worth over $10 billion, that would be a large cap. If we're looking at something between 2 and 10 billion, that's a mid-cap company, a mid-size, and a small cap is less than 2 billion. But you know what? If I had a $2 billion or $1 billion company, that's not that small.
We wouldn't be here right now.
Right. These are still good-sized companies. So we're not talking about the mom and pop shop down at the corner of Broad Street.
Right. Okay. You mentioned foreign stocks. Are there different types of those?
Very much so. And generally, foreign stocks are broken into developed markets like Japan, Australia, Europe, versus developing markets. And these are countries like Brazil, Russia, China is still considered a developing or emerging market. And so as they're out there, those developing or emerging markets have a lot more currency risk, a lot more embedded risk in them. And so it's something that you just want to be aware, not all internationals
you could
created
be rolling
equally.
the dice.
Yes.
Okay.
All right. Well, what is a dividend-paying stock?
So a dividend-paying stock is, at its face, this is why you're investing in a stock. You're expecting current or future dividends. You want your money back, right?
Yeah.
And so the dividend stock is one that's just making a profit right now and paying that out to its shareholders where they can get a nice little dividend. Good examples of this would be real estate companies, energy companies, a lot of the utilities, some of the financial institutions where it's the boring stuff. You know, they're up there, they're making a buck or two and just passing that profit back to their shareholders.
That seems almost like a safe bet.
It's considered the much safer bet.
Yeah.
The value stocks are generally less volatile. You've got that income coming from them. That's something that when people are getting greedy and going after the growth stocks, they ignore just the benefits of the dividend stocks.
Okay.
A good balance is usually best.
Lastly, sector stocks. What are those?
So this is getting into different areas of the market, and the S&P 500 is broken down into these sectors: communication services, consumer discretionary. People thinking they're buying. The staples are the stuff that people gotta have. The energy, you're going to want to turn the lights on.
Mm-hmm.
The financials, transacting money. You're going to have health care, where people are going to get sick whether they want to or not. Industrial, the manufacturing, the materials used in the manufacturing, real estate, and then technology and utilities round out. So you can have an investment just in any one of those sectors, or you could combine that out.
Okay, fascinating. Well, do you have any final thoughts on all of this?
Well, really what you want to do is you want to pick stocks that fit your portfolio. What are your goals? What are you looking at? You want to have stocks that when you invest, it's in a tax advantage way. So as you make those profits, hopefully you're not sharing as much of those profits with the IRS as you would otherwise have to. And I'd mentioned this before, but having an asset allocation, the good balance, you might get really excited about technology because it's taken off. Mm-hmm. It's a very volatile sector. So you might lose your shirt here as it's going through. Have it spread around, have a good asset allocation, include some bonds in there. And we're going to be talking about bonds next week.
Okay, that's what I was about to ask.
And so we'll have that in there. So it's, it's balanced, just like you got the cooking segment coming up where they're going to have different ingredients that come in.
Yeah.
When you're putting your portfolio together, Josh knows you're going to have different ingredients in the portfolio.
We don't know what these ingredients are.
I like the way you word that, though. Thank you for us.
Will, good to see you again. Thanks for coming by.
Will.
Hey, great to be here.